Good morning. For Traders Exclusive, this is George Kachuk. We're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, I'd like to talk about the equity markets this morning, and the equity markets continue to be in a confirmed uptrend, meaning NASDAQ keeps hitting new highs, the leading stocks are doing well, S&P and the Dow are a few percentage points off their highs, so everything's looking really well. There are a few minor divergences, namely the small caps are still stuck in a trading range, basically since about December. So we're waiting to see if that can break higher. They pretty much have bounced off support, and that's a good sign. Same with the transportation average. The Dow Jones Transportation Index is still kind of in a trading range, bounced off support, but isn't kind of moving back up. So we're looking at those two indexes to tell us if this trend is going to continue or if this negative divergence will pull the market lower. Now, one of the more interesting things I want to talk about is the role of gold and the financial sector. Basically, it's almost like a pair of trades, like the machines are trading this inversely, meaning on the days when gold is up, financial stocks are down, and vice versa. When gold is down, financial stocks are up. Now, an interesting event happened last Wednesday when the Fed announced a rate hike. Typically, expectation was by the markets that financial stocks would continue to rally as bond yields would continue to rise and the dollar strengthen. But just the opposite happened. Perhaps the market anticipated that the Fed's speak was a little too dovish. So instead, what we saw is a little rally in gold, and gold's been up basically now. This is about the fourth day up in a row, and the financial stocks have been weakening. Now, this doesn't mean anything at this point, so I want to talk about some of the levels we're looking for. So basically, a lot of the financial stocks are right at their 50-day moving average, and that's I'm talking about the banks, the brokers, and so forth, life insurance companies. If they were to crash through this support level and gold was to shoot higher, then indeed, that might be it for the financial stocks. It's all to be seen. So in terms of gold, right now gold's trading at 1230-ish level. If gold will get above 1260, I might say that's interesting. And if gold gets above 1300, I said that's very interesting. And at the same time, if financial stocks are breaking down below their 50-day moving average, that may tell us that the market doesn't believe that the Fed really will raise rates, that they're going to let inflation run away, and that's why traders are piling into gold. So, of course, this is all to be seen. I believe that financial stocks will find support at their 50-day and bounce higher, but of course, we don't want to predict this. We just want to react to what's happening in the market. So again, look to see if the financial stocks can hold their 50-day moving average. Let's make sure gold stays around these ranges or lower. It's just been a little bit bounced. Basically, it's still in a multi-year downtrend. That's why I expect this to continue. But if gold did break above that 1260 level, or even above 1300, then pretty much that may be telling you that gold may be the place to be and get out of financial stocks. But as always, don't take my word for it. Let price and volume be your guide. So in summary, equity markets are in an uptrend. Keep your eye on gold and financial stocks, and have a great trading week. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.